FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in today's video guys, we're going to talk about essentially how can we avoid getting into bad trades using the indicators. Alright, so using the FXN indicators, how can you avoid getting into bad trade? So that's what we're going to talk about in this video guys. So without further ado, let's get this video started. Alright guys, so welcome back. So what we're going to do here guys, we're going to go over a couple different examples, alright, of how to avoid essentially getting into bad trades, because we want to make it very obvious as far as what we want to trade. And so if I can give you some examples to stay away from, that way you'll know exactly what you're looking for. Essentially when you're looking to trade, whether or not it's a good trade or a bad trade to get into, right? So this is pound USD, and the first thing I want you to notice is essentially the Asian range is only 14 pips. Okay, so first things first, anytime that you have an Asian range that's 15 pips or less, so Asian range 15 pips or less, all right, I'm only interested in taking a type 1 setup. Okay, so I only take a type 1 setup on a Asian range that's 15 pips or less. Why is that? The reason is that because as we play these bars here, you'll start to see that essentially every bar is about 10 pips by itself, right? So essentially it makes it very difficult for you to determine whether or not it's a type 2 or type 3 setup or anything like that, right? So you want essentially price to set up a type 1 setup, and that's the only one that you'd want to take when you have an Asian range that's 15 pips or less. It just makes sense, and it makes it super easy for you, so you're not overthinking a trade setup, okay? Because as you can see, it's not doing anything right now. Each of these candles is about 10 pips long. You know, when you have a range that's 14 pips, I mean, that's how can you essentially see a valid pattern like that when the candles are so big, you know? So it's just better for you just to wait it out and have patience and let it show you a type 1 setup, okay? So here we're going into essentially the US session here, and we already have essentially what could be a potential one leg up here that we moved outside of the box. Here's a potential second leg here, and so essentially you're just waiting for a crossover, which happens here, right? So essentially your trade setup, you know, let's just say that you're aiming towards 30 pips, is just right here. You're at, let's say, a 7 pip stop loss, okay? And if you play this out, essentially you'll get your 30 pips, let's say by 1 o'clock, 1:45 or so, you know? So the trade is valid. You have basically first leg, second leg in the box here with the crossover, so that's set up correctly, and you got basically price to move outside of the box to give you an actual setup to look at. Okay, now in a perfect world, what you would want is you would want price to basically go up a lot higher. The reason that it didn't go a lot higher is because price was kept in check basically by the 200 EMA here. Okay, so price was kept basically in line by that EMA. If that EMA wasn't there, then you'd probably be looking at a way much higher move, you know, in a bigger forming M there. Okay, but just an easy example of essentially avoiding bad trades. All right, if your pip range is 15 pips or less, always just wait for a type 1 setup to develop. If it doesn't develop a type 1, then you don't trade it. It's that simple. All right. So here's another one again on pound dollar, right? And so as we're seeing what's happening here, you're seeing that price is basically getting stuck between the initial high of the Asian range and the middle of the Asian range. So it's just going back and forth, back and forth, back and forth, right? Whenever you see this, okay, this happening like this is not going to give you a good trade setup. Okay? This is not going to give you a good trade setup. It's just market makers essentially collecting traders' trades. Okay? So please do not get into a trade with this stuff here. This crap is not going to get you a good trade setup. Okay? So anytime that you see this spikes back and forth, back and forth, back and forth, you stay away from it. Okay? Stay away from this stuff. It's not going to essentially give you anything that's tradable. And yes, this trade goes all the way up here. And here we have basically the return on the US session. Right? On the return of the US session, you have first leg, second leg, and then you get a crossover over here that you can take. Now, because you can take that trade, essentially your first target should be the 50 EMA, because typically on the US session you only get about 20 pips anyways, you know. So let's say on this trade here you're risking, you know, about 14 pips basically to get about 20 pips out of it, and you don't even get that. You know, you're at, let's say 14 pips or so, you know, if you get into this trade after the crossover happens, which is basically after this candle here. You know, so is it essentially worth getting into this trade when you basically have the 50 EMA that's going like this? And if you go back to the charts, you'll see very likely, almost, I would say 80% of the time, when you get a reversal and you have the 50 going with it, the price is going to go to the 50 and that's it. So a lot of times you're just going to get about 20 pips anyways. So you have to remember, okay, is this trade essentially worth it? Because this right here was not a setup for you to trade. So think about that whenever you're trying to basically get a reversal M here. Where is the 50? Are you able to get, you know, are you going to get 20 pips out of it basically? And are you risking, you know, way too much for it, for potential, for this trade setup here? So let's take a look at a couple more examples. All right, here's another example. Same thing, pound USD. If we play this out here, 15 pip range, right? So you want to get a type 1 setup, right? That's what we're looking for. So can we get a type 1 setup? Are we getting any kind of a setup so far? No, there's no kind of setup. Okay, you might think that, let's say this is you might think that this is an M here, like this. That's not an M. Okay, that's not an M. That's nowhere any kind of a pattern setup that we're looking for. Okay, it's not going to the top of the range. Okay, this is what I'm talking about. Why you want a type 1 setup is because it makes it very, if you're looking at it, you may think that this is an M here, but this is not an M trade setup that we want to take. Okay, because price is not going essentially to the top of the range. Okay, it's going just below it like this. And it's going just below it like that because it's just essentially moving and getting stuck in the middle of the Asian range. And so that's why you don't trade that crap. Okay, you want essential price to move away from that and show you a clear setup. If the setup isn't clear and obvious, then you're not taking the trade. I don't care if it's in the box or not. Right? So look, you're not taking this crap. This is nothing. Look, this is nothing, 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 nothing. You see? Even if you thought this right here was a first leg, second leg, look, it's nothing. This is crap. You don't take any of this stuff. Okay? So again, if all this stuff is just market makers collecting traders, collecting contracts. That's all it's doing. The whole day. The whole day. It's just a setup for a much bigger move that's going to happen later on during the week. That's all it's doing. Look what it's doing. From the beginning of the week, made a false move up and then straight sideways for 2 days. Okay? For 2 days straight sideways movement. Okay? So this is no good. No good at all. Alright, so still on pound CAD. Alright, let's play this one out here. Notice how price is moving from the Asian range out, and it stopped in the middle, right? And it was there for a good 45 minutes or so until it moved to the top of the range, and now basically it's tagging yesterday's high. So this line here, this yellow line, is yesterday's high, right? So what are we getting here? That's a potential what? First leg here of an M, right? And so look, here is a potential second leg right here of an M. Okay? Now I want you guys to see this because look, if you had a crossover happen, on the next candle right here, right? So this created the crossover, right? Now, look at where price is right now. Price is where? In the middle of the range. Okay? Price is in the middle of the range. Ideally, the whole point of you waiting for a second leg, M or W, inside of this box is because it basically gives the 5 and 13 a chance to catch up to price, right? So if you look at where price is, essentially when it creates a first leg of a potential M, right? The 5 is right there, and the 13 is way separated from price. So ideally, when price goes back up to make a second leg, right, it's supposed to basically give a chance to the 13 EMA to basically get caught up, right? So it's basically like this, and then when you finally have the next candle come down, you get the crossover right here, and then you can go ahead and enter the trade, right? But look where you get the crossover at on this example. The 13 never gets a chance to get caught up to price all the way up here. You see that? It only catches up here when price is already headed towards the middle of the range. Now look what happens. If you guys take this stuff, right, watch what happens. You have to be aware that if you're taking this as a type 2 trade setup, right, you have to be aware that it has to clear the middle of the range, right? If it doesn't clear the middle of the range, what is it? It turns into a type 3, right? So watch what happens here. Hits the middle of the range. And then now, what are we doing? Look, you see that? If this was truly the high of the day, okay, there's no need for them to stall here because they already have all of the retail traders trapped up here. So there's no need for them to stall here. Okay? If this is the actual real high of the day, okay, then price will just move straight down consistently. It won't stop like this for 45 minutes. Okay? So keep that in mind, that if you take this, and it's fine, if you take this as a type 2 setup, you have to be aware that it's got to clear the middle of the range. If it doesn't clear the middle of the range, you got to start thinking of an exit strategy, or just take profit and just wait to see what happens. In this case, what happens? That type, what you thought was a type 2, actually turned into what? A type 3 setup. You see that? Okay. So what you thought was a type 2 setup initially, by the time it got to the US session, it was a type 3. All right, so be aware of what's happening with price action here. All right, if you take this trade as a type 2 setup, that's fine, you can take it. Just realize that you're taking it way too late up here. Ideally, the whole point of waiting for the second leg is, again, for that 13 to get caught up to the 5 so you can get a better entry up here, not down here. Okay, so keep that in mind. And not to mention, you're already at the edge of the box too. So just wait and look what happens. It just moves straight across the opening of the US session, 9:30, 9:45, 10 o'clock. Boom, you get your trade. Okay, it's about a 40 pip move. And this is actually the high of the day. See that? That's actually the high of the day. All right, let's take a look one more. So again, pound USD, here we have a 10 pip Asian range, right? And look what's happening with price. You see that? Whenever you see this stuff, guys, you stay away from this like the plague. Okay, just stay away from it and go look at a different pair. There's no reason for you to trade this crap. Okay, this is complete garbage that you don't trade. So don't try to find anything in it. It's a 10 pip range. You clearly want price to move outside of that range. Okay, and it's not doing that. It's just moving straight sideways, 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 sideways. Just stay away from it. It does it no good. Okay, it's all complete garbage. Okay, so I hope these examples have helped you essentially just see different examples of what trades you should not be getting into. Okay, just by using the boxes and understanding the different Asian ranges that you should be getting into and should not be getting into. So guys, until next week, have a great Thanksgiving week and enjoy the rest of the weekend.